in a fiscal budget impasse, and Europe is already in recession. What would a global recession mean for China's fledgling recovery?
I think it's going to pose significant risks to China's growth in 2013, because if we talk about exports to these two advanced regions, Europe plus United States, that still accounts for almost 40% of China's total exports. So if these two regions falls into recession, then there is no hope for China's exports for 2013, even if China continues its strong export growth to the other part of Asia. I think if US is going to fall into a recession, then definitely we will have to revise down our GDP growth for China for 2013.
In your report, you mentioned China has used up all their easing measures for the fourth quarter already. So what sort of policies can China further come up with, if at all?
Yeah, in China's case, typically in a country, you can use both monetary policy or fiscal policy to ease. And in China's case, they have already cut interest rate by 2 times, which for the second cut, they have also widened the discount rate on the lending rate floor from 10% to 30%. So if you do the calculation, it's equivalent to 7 interest rate cuts in China, each by 25 basis points already. And also we see that total social financing has been growing quite strongly since May. So that means that on the monetary side, the Chinese government has pretty much done all they can do already. And on the fiscal side, according to our calculation, China's fiscal budget deficit as a percent of GDP is going to double the size of last year. In that sense, the fiscal policy is also very proactive. But in China's case, they have special weapons such as loosening on the local government financing vehicle or loosening on the property sector to support the economy. I personally think that loosening on the property sector is not very likely, but I think we do see signs that financing to local government financing vehicle has been loosened somewhat, particularly on the bond market and also with the trust loans.
You expect a W-shaped recovery in China's economy. Would that still stand if the US goes into recession?
This is exactly why we see China probably will go through a W-shaped recovery rather than a U-shaped or V-shaped or rather L-shaped. Because for the first half of the year, we see China has already done lots of easing measures. And also because of the exports growth to other Asian countries has been quite strong, this is going to support China's growth in the first half of 2013. But for the second half of 2013, probably if we do not count for more lending to the local government financing vehicle, and then Asian exports slows again, then the slowdown in United States and Europe will dominate the growth picture, and then we will see that risks on the growth outlook for the second half of 2013 will rise again.
The U.S. Treasury report came out and the Obama administration declined to brand China as a currency manipulator, while saying the yuan remains significantly undervalued. The comments came just as the yuan closed at a record. So what is the true value of the yuan and where do you see it headed?
There's lots of valuation models which try to estimate what is the equilibrium value for China's exchange rate. I still see that, personally speaking, in my personal view, I still think China's renminbi is probably undervalued, but will not be too much undervalued. I would say like a single-digit undervaluation is proper for China's renminbi. And in that sense, we have to bear in mind that China's structural inflation in the medium term is probably going to be higher than what it had for the past 10 years. For example, for the past 10 years, China's average CPI was only 2%, but going forward, the PBOC was targeting 4%. So some of the appreciation in real terms will actually take through the channel of higher inflation differentials rather than nominal appreciation. So although in real terms we still see renminbi is undervalued, but it doesn't mean that in nominal terms it will still maintain a appreciation pace of about 5% a year. We will say 1% to 2% each of the year is reasonable.